In today's video, I have a tiny microcap stock that just keeps announcing big news, and this can't be ignored by the market forever. They have had some big news in the past few days, several upcoming catalysts which I will talk about later, and the company is set for $400 million in revenue this year and $1 billion in revenue within the next 2 years, fueled by its massive ongoing expansion. In today's video, I will be talking about IQSTEL, Nasdaq ticker IQST. Since going public in May, the great news keeps coming, but somehow this is still flying under the radar. But I don't believe that this will be under the radar for much longer. Now, we've got a lot to get through in this video, so I will try to keep this intro short. But if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. And I would really appreciate it if you could try to answer the question later in this video. Now let's get into it. IQSTEL is a US-based multinational technology company providing advanced solutions across telecom, high-tech telecom services, fintech, AI-powered telecom platforms, and cybersecurity. They offer leading-edge telecommunications and technology services, and they're strategically optimized a high-growth portfolio of innovative technology companies operating across a diverse market worldwide. The company's vision is to become a $1 billion revenue multinational technology company by 2027, with the investment goal to fuel potential by empowering technology that generates substantial long-term value for shareholders and customers. IQSTEL has a global footprint, with operations providing access to diverse and high-growth markets, mitigating risk and, as it says here, maximizing investment opportunities while enabling us to leverage local market knowledge with a global perspective. And this is a truly global perspective, with 6 offices around the world, operating on 4 continents, serving more than 20 countries with over 100 employees. And they have partnered with some of the world's leading companies too, which I will talk about in a moment. This company has a clear path to success with strong revenue growth, moving them closer to the goal of becoming a $1 billion revenue company. Now, usually when I see something like this, a goal of going from a penny stock with a few $1 million of revenue up to a $1 billion revenue company, I would be skeptical. But I've followed IQSTEL over the past few years, and this company really is growing their revenue year after year. But the share price hasn't reflected their revenue growth. So IQSTEL just had some big news in the past few days. But first of all, I want to look at this because last week IQSTEL issued their June update, giving us a comprehensive update following several transformative milestones over the past 60 days. So first of all, they have reported $77.8 million in preliminary revenue from January to April. This represents a 12% growth over the same period last year, and they have reconfirmed full-year guidance of $340 million and on track to reach $400 million annualized run rate by year end. Now, I'm sure we all know that IQSTEL only recently uplisted to Nasdaq, something that had been promised and was on the cards for a long time. But I am seeing some confusion about this. It's important to know that IQSTEL did a direct listing on Nasdaq. This was not some dodgy reverse merger with a listed company. This was not a SPAC merger, which brings a whole load of complications for shareholders. This was a direct listing on Nasdaq with no capital raises and no shareholder dilution. In fact, this company has done every step in the correct way of doing things. They have went through every level of the OTC markets. First the pink sheets up to the OTCQB, then the OTCQX, before finally the direct listing on Nasdaq. This is the correct way to do things, and unfortunately it's fairly rare to see it these days. Now, in recent weeks they have acquired Globetopper, accelerating fintech expansion, and I talked about this in my last video, so I might mention it again a little bit later. But this is important. Their key financial metrics. Now, remember that this is a tiny microcap company with a market cap of only $30 million and a share price of only $9. But they have assets per share of $14.50, revenue per share of $100, and equity per share of $4.30, as well as positive net income and adjusted EBITDA. But IQSTEL have big plans. Getting uplisted to Nasdaq was just the beginning as they push forward with more than 600 global telecom clients, a growing presence in 21 countries, and lots of new assets. IQSTEL is rapidly expanding, and CEO Leandro Iglesias stated that the Nasdaq listing is not the finish line, it's the beginning of a new growth chapter. With stronger visibility, strategic acquisitions, and scalable platforms, we're moving quickly towards our $1 billion goal. But to get a clearer picture of just how undervalued this company is right now, let's take a look at the investor's presentation. Now, we've already seen that this is a global company and that they plan to become a $1 billion revenue company within the next 2 years. But IQSTEL have evolved from high-tech telecom infrastructure roots into a dynamic technology conglomerate with several subsidiaries spread across their 3 main business focuses: telecom, fintech, and intelligence. This diversification has been fueled by a combination of targeted acquisitions and organic growth, allowing the company to expand their market presence and create more exciting opportunities. Now, as I said earlier, they have been growing quarter after quarter, year after year, and the revenue per share has increased from $30 per share in 2020 all the way up to $111 by 2024. To date, IQSTEL has completed 11 acquisitions and ventures and continues to develop an active pipeline of potential future acquisitions. And we can see this here over the past 7 years. They have developed cross-selling opportunities to optimize cost and operational efficiencies, which has seen an incredible growth trajectory over the past few years, ultimately leading to them achieving $282 million in revenue last year. But IQSTEL counts some of the world's largest companies among its customers, such as Verizon, Vodafone, T-Mobile, and Orange in the UK. This is an impressive list of customers for a small microcap company, but it's the company's vision that's most impressive. By the end of 2025, IQSTEL is committed to debt reduction, cost efficiencies, and strategic acquisitions, targeting the $400 million revenue run rate. And this is incredibly important because IQSTEL grew their revenue over the past 2 years. They need to improve their margins, in my opinion. Back in 2021, IQSTEL grew their market cap to over $137 million on just $64 million of revenue while being an OTC company. And this is important because there is now a huge disparity between revenue and company valuation, because today's revenue has grown to over 4 times this at $283 million, while their market cap is now just $30 million. And the company is no longer an OTC company, now it's a Nasdaq listed company. Earlier this week, IQSTEL announced the advancement of a strategic partnership with Cybersecurity for its advanced AI-powered next-generation customized cybersecurity solutions for the global telecom industry. Now, the global cybersecurity market is expected to surpass $500 billion in the next 5 years, which means there is going to be more emphasis than ever on cybersecurity due to the escalating cyber threats. This collaboration is now entering an execution phase focused on product rollout and market development. So this was originally signed a few months ago and they've gone past the initial phases. Now we are on product rollout and there are 6 pillars to this collaboration. And these are listed here, such as developing advanced cybersecurity solutions, launching Cyber Shield that major telecom carriers can offer to their own customers, which include all sizes of enterprises from small to large and individual customers, AI-driven operational optimization for Cybersecurity, where they are exploring the integration of IQSTEL Intelligence, the AI platform, and of course AI-powered next-generation cybersecurity platform. But this is important because this is expected to be launching to the market very, very soon, with the 2 companies actively planning a commercial launch in the second half of 2025. Now, just remember that IQSTEL are partnered with some of the world's largest companies across 6 continents. The likes of T-Mobile and Verizon in North America, or Vodafone and BT in Europe, to name just a few. There is no shortage of partners in the telecom industry for IQSTEL to market their products to. But guys, what do you think? IQSTEL announced another step towards their expansion goals with the acquisition of Globetrotter.com. Globetrotter has recorded strong growth to date and is planning to generate over $65 million in profitable revenue in 2025 alone. Its financial outlook over the next 3 years reflects steady growth and operational momentum. Our goal is to take Globetrotter's fintech products and services and scale them globally through IQSTEL's platform, which already reaches over 600 of the largest telecom operators around the world. In parallel, Globetrotter's existing client base, including prominent multinational brands, opens the door for IQSTEL to expand its reach into new sectors, allowing deeper penetration into the enterprise and global brand markets. In general, this allows convergence between fintech and telecommunications in high-value markets across America, Africa, and Europe. IQSTEL are actively growing right now, and they're heading for a massive $1 billion in revenue in the next 2 years. But as we know, the stock is severely beaten down. Personally, I think that over the past while, they have sacrificed margins with the goal of rapid expansion. But if these margins improve and the company has $1 billion in revenue, then the current share price might just be a tiny fraction of the future share price. But that's just my opinion. Let me know your thoughts in the comments. Remember that I'm not a financial advisor and this is not financial advice, so I highly recommend you do your own due diligence. Thanks for watching, and I'll catch you in the next